some of the brokerage views, but let's get in Axis's view also. We have Gaurav Malhotra, Executive Director of Axis Capital, on the show now. Gaurav, first, give us your initial take on this story.
Yeah, hi. Good morning, everyone. See, the way to think about is that, the moratorium was coming to an end in September 25, at which time the payments of spectrum would need to be kickstarted. So this has come at a fairly opportune time. And the way we think about it is that, at least for the next 2 years, which is FY26 and FY27, the cash flows would sort of match, right? And I say cash flows, I mean the cash EBITDA versus the amount of payment needed to be paid for AGR dues and the spectrum dues. There will be a little bit shortfall in maybe FY26, but sort of manageable. But come say FY28, again, the cash flow mismatch sort of again moves up. So we'll have to see how that thing goes. But at least for 2 years, the situation is fine. And obviously with this equity conversion, the probability of the long overdue debt raise also improves. And that obviously will help the company, fixing its network, which should help in stemming the subscriber loss, in helping it the 5G rollout, etc. So those are positives, but we'll have to see the benefit of that, going forward.
Right. Gaurav, so, you've highlighted two very important points, after analyzing this particular development. Number one, long overdue debt raise. Do you think all the decks are now cleared for banks to get the comfort to lend to Vodafone? And number two, you've spoken about arresting subscriber decline. How do you think, debt raise can help achieve that?
Yeah, see, the thing is, this issue, the way to think about it is that, it's not as if all the issues have been resolved. It's just that the next 2 years, at least the next 2 years, cash flow issue has been sort of fixed for now. And I think so the banks were trying to get some clarity on, what happens to the AGR dues, what happens to the spectrum dues. So at least part of that has been addressed. So that should increase the probability of the debt raise. Now, the company obviously has been fairly aggressive in its capex plans. Post the equity raise, they've already launched 5G in Bombay. They're going to launch it in a few other circles in the coming couple of quarters. So fixing of your 4G network, rolling out 5G, things which should have happened, say, over the past few years, but were not able to do it because of cash flow mismatch. That sort of is restarting, and that should help the company in stemming the subscriber loss.
But you're saying the cash flow will be matched. The company will be able to repay its dues for FY26, FY27. What happens FY28 onwards? Is there a risk of more government conversion into equity?
That is a likely scenario, right? Because the AGR of around 78,000 crores has not been touched, right? So every year you are paying around 17,000 crores over the next 6 years, right? There is also residual deferred spectrum liability, which still needs to be repaid. So FY28 onwards, some more will have to happen. Yes.
Will that not keep investors and new shareholders at bay? Because this dilution risk will stay. Anyway, the FPO price was so much higher than the current market price. So some investors, retail shareholders, have already burnt their fingers.
See, the thing is, as per the norms, the conversion cannot happen less than the face value, and the face value is 10 rupees. So irrespective of where the share price is, the minimum the conversion price had to be was 10 rupees. And like you rightly said, we have a reduce on this name.
Understood that. Gaurav, going forward, have you gone ahead and baked in any price hikes across the sector for Vodafone? And any kind of sensitivity analysis that you have in terms of the spectrum payments due and how a price hike can benefit?
Yeah, so see, for us, for all the stocks in our coverage, we have assumed a fairly decent output take on the back of tariff hike, subscriber premiumization. So when I talk about the cash flow matching for FY26-27, it assumes an ARPU uptake on the back of these two. And for example, for Idea, we are assuming like a 15% growth in top line for FY26 and a 20% growth in FY27. So yes, those numbers are being built into our estimates for Vodafone and also for Bharti NGO.
Okay. And a view as far as Indus Towers is concerned, clearly a beneficiary, but can you quantify how it benefits? Is it higher dividend payouts or higher requirement for tenancies, given the fact that there could be some capex coming in from Vodafone?
Yeah, see, obviously for Indus, it gives visibility, whatever gives visibility to Vodafone to expand its network obviously helps Indus. But, at least in our numbers, we have given Indus the benefit of what guidance Vodafone has given in terms of its network expansion over the next 2-3 years, which is premised on equity plus debt fundraise of roughly around 45,000-50,000 crores. So at least from a sentiment, it is positive. Now, in terms of the reinstatement of dividend, it obviously does increase the possibility. But we do feel that maybe the actual debt raise will have to happen before we see an actual reinstatement of dividend happening at Indus.
Gaurav, you've got a reduced call on the stock. Can you give us the financial position of Vodafone Idea in terms of numbers now? Just give us the key numbers in terms of the regulatory payments going ahead. How much has it come down by? And therefore, the shortfall, according to you, by your estimates, are you assuming a tariff hike? Just give us the key numbers to track.
Yeah. So the way to think about it is that there is an AGR dues of roughly 17,000 crores every year. On top of that, there is a spectrum dues over the coming years. The way the spectrum dues will move is for FY26 is going to be roughly around 13,000 crores, which will move up to 26,000 crores from FY27 onwards. So the total will be 30,000 crores in FY26 and around 42,000 crores in FY27, 28 and 29, right? Against this, we have a relief of around 37,000 crores. So and that will be sort of, most of it will come through in FY26 and 27, right? So versus 30,000 crores, the actual payment will be 90,000 crores now for FY26 versus a 42,000 crores. Again, it will be roughly 19,000 crores of payments, right? So FY26, 27 is where most of the benefit comes. Come FY28, the payments again versus 42,000, you will have to pay around 40,000 crores. So that is where I was saying that, look, at least for 2 years you are sort of sorted, but from FY28 you need to see what happens from a cash flow mismatch perspective.
Gaurav, lastly, very quickly, your pecking order in terms of which are the telecom stocks you like, Airtel, Jio, Idea, and any view as far as Indus Star 2 is concerned?
Yeah, so for us, we have bias on Bharti, Airtel, and Reliance. Obviously, Jio is not a standalone stock, but we like Reliance from Jio perspective. We have an add on Indus, and we have a reduce on Vodafone.
Gaurav, thank you very much for joining us on this important day and sharing your perspective. We'll get into a break. On the other side, we'll discuss commodities. Manisha Gupta joins in on the other side.